Thank you for joining me this morning. I hope everyone's obviously keeping safe out there. First of all, especially our Victorians, friends and colleagues, and so on with COVID issues. Berkeley's policies, we're still working from home. We're working from home to the end of the year, so it was a nice break for me to get on the freeway this morning and come into a quiet office here to present to you. Not sure if any of you got to see the WRB rock concert last week. Some of you were invited. It's a virtual concert. I just want to state there'll be no singing today or no songs by me, even though when I went to school at Trinity College every year for speech night, they made us do Bohemian Rhapsody, and that's programmed in my brain. But anyway, with adieu, let's get on with it. First of all, just about understanding the principles of association liability that the presentation started off with. I'll just get myself ready here. Okay, so we're going to touch on today, what is association liability insurance? What do we mean by association? Features of association liability policy and points to note. Industries to discuss, real life claims examples that are Berkeley examples, points to note about association liability policies and what information is required to get an association liability policy. An association liability policy indemnifies the insured against the consequences of a breach of professional indemnity, professional duty, particularly allegations of negligence, officers, bearers liability, association reimbursement, association liability defence costs. An association liability policy is a professional indemnity-based product which also attaches to other classes of cover, e.g. office bearers, which is known as D&O insurance, employment practices cover, fidelity or crime, and tax audit cover. The definition: an association is anyone who is an incorporated association, a registered legal entity, usually established for recreational, cultural, or charitable purposes. It must have at least 5 members, and all profits are put back in the association activities. In general, an association is a group of persons banded together for a specific purpose. At least 2 persons must sign the document, which must be dated. The definition of an association can vary under each state law. Some of the features of association liability policy and points to note: the office bearers' liability, the D&O, the association reimbursement, PI component, the association liability, the defence costs, the Competition and Consumer Act and other legislation, the dishonesty of insured persons, defamation, libel and slander, fines and penalties, appointed sub-consultants. Some of the optional extensions are fidelity.
Excuse me, Jason, I'm just going to jump in with you. I'm sorry about that. You've just got a little box that's showing up on the right-hand side of your screen. If you can maybe just move that or close it down, it's covering up some text.
Yep, no problems.
Thank you. Sorry for interrupting.
Adjust. How do I get rid of that? Okay, is that better?
Yes, that's better. Thank you.
Okay, so optional extensions: fidelity, employment practices liability, tax audit cover. I've also seen some association liability products that attaches liability, public liability and cyber. Just wanted to discuss some industries, and on a day-to-day when I'm underwriting association liability, just a bit of a breakup of the associations I'd see. So first of all, just touch on the professionals. So they are seeking to further a particular profession, the interests of individuals engaged in professional and public interests, such as for the insurance and finance profession. ANZIF would be a classic example of that. Community associations, these are probably the run-of-the-mill majority I'd see, and the majority of the associations financial lines underwriters see, as I put there, and would target generally their solid moral risks. So they could be anything from wellness, domestic violence centres, men's sheds, so a whole wrap of what the community is about. The other one, which is always, we see a few of other sporting. So the community sporting organisations, they're a credible association risk. However, you know, from a financial lines point of view, professional sporting clubs are of high risk and consequence, such as the AFL or the NRL, state league basketball. Unions, unions, we do see a few. We generally don't quote them. They're highly exposed, as you can understand. There's a limited financial lines markets to consider quoting association liability for unions. Moving on to the next, from unions, political parties, very much in the same tone. They're not an ideal risk for financial lines underwriters. They're not desirable given the professional content. The aged care, interesting sector in these times, COVID times. They're considered on a case by case. However, in recent times, obviously with the Royal Commission and COVID issues, it's made it tougher to underwrite. However, on a personal thing, my nonna's in a aged care home, so I always soften myself for aged care. But who said underwriters can't be personal? Moving on to real life claims examples. So with the first one here, so as I said, we've taken out names and that, but these are real claims we've paid, and there's a couple that are still ongoing. First one here is we paid $13,000. A coach was let go for breach of employment contract after advertising private coaching academy through the insured's contact database. Having a read of this one, it's quite interesting because Berkeley's one of our innovations is innovation. So I think we just have to curb certain styles of innovation. This was very innovative. With regard to next one, allegations of breach of contract agreement, we paid $13,000 again. Insured engaged claimant as a consultant to oversee the redevelopment of the facility. The claimant was to be paid $10,000 per month for his duties. The insured terminated the contract, alleged wrongful termination. The claimant costs were originally $250,000, so settle it for $13,000. Obviously, there's a lot to our favour there. Also, alleged discrimination of breach of agreement. We paid $35,000. The claimant issued proceedings against the insured for alleged breach of terms of settlement of a previously agreed deed. Alleged discrimination. The claim stemmed from rejection of advances from a club coach. A dispute matter for $85,000. Dispute between a coach and a referee, both accusing the other of harassment and bullying. The association became involved when the complaint escalated. The claim became particularly nasty, and each party engaged their own legal representation. When it does become nasty and each party represents themselves, the claim costs for us definitely increase. A defamation matter, we paid $280,000, claim made against by a coach in response to bullying allegations. A fraud matter, misuse of travel cards, $11,500. From a WA perspective, just got to keep an eye on those expenses now going to inside WA. Everyone seems to be going to Exmouth and Broome. From a crime perspective, we've paid $82,000, a treasure of misappropriated funds from the association. We had a reinstatement of a member claim. We paid $47,000. The client received a draft summons seeking reinstatement of a member and damages. The summons was to seek relief in relation to the decision of the association to terminate for a period of 14 years membership. An anguish claim, which is still on the go, and these ones can be quite intense and technical in nature. So far, we've paid $31,350. We've got an outstanding reserve of $105,000. A letter of demand received by a claimant alleging they have been subject to improper treatment, resulting in mental pain and suffering, seeking compensation and public apologies. With regard to claims issues, one of the major issues for financial lines insurers is the additional exposure of associations where office bearers are more driven by their own importance as opposed to a commercial business where the profit incentive is much stronger. Association liability claims can arise from people involved in associations due to status, and the need for status can cause claim issues. A couple of examples I was thinking about that. Queensland has Mr. Clive Palmer, like Western Australia has Andrew Forrest. But a live example for me would be I'm a member of the Vines Golf and Country Club, and our chairman is the leading wine writer of the West Australian. Now, some might question, well, what's a wine writer and a golf club got to do in common? Well, if you ever played the game of golf, the 19th hole is always the longest hole on the course, and that's where the two meet. Points to note about association liability policies. Association liability is written on a claims-made basis, not occurrence. A claims-made policy provides coverage that is triggered when a claim is made against insured during the policy period, regardless of when the wrongful act that gave rise to the claim took place. Retroactive date is a date after, which acts, errors or omissions of the insured are covered. No acts before this date will be covered. Continuous cover clause, I always have issue with that one. So basically that's just carrying on from past insurers. So make sure that the cover is equivalent and carries over. The limit of indemnity is usually any one claim and in the aggregate. The limit of indemnity is the maximum amount the insurer will pay in respect of any one claim. The aggregate limit can be increased by reinstatements. Limits can be defence costs in addition or inclusive. A cost exclusive or cost addition limit does not include defence costs within this limit. They are payable in addition to the limit of liability subject to an average provision. Cost inclusive limit of indemnity includes both defence costs and compensation, so the limit specified is a maximum. The insurer will pay out to settle a claim. Moving on to excesses, can be inclusive or exclusive of costs. So just pointing out the differences, because we do get asked the questions, what's the difference? Well, a cost inclusive excess applies to both the costs and expenses incurred by the insurer to the reasonable costs incurred by the insurer with the insurer's prior consent in defending, investigating or settling of any claim, as well as the compensation amount payable. A cost exclusive excess does not apply to costs and expenses incurred by the insurer or insured in defending, investigating or settling any claim. The excess applies to the indemnity or compensation amount of the claim only. So you can definitely see the benefits of a cost exclusive excess to a client. Jurisdictional limits. As per most associations' PI policies, this refers to the countries where the policy will respond to claims being made against the insured. Territorial limits. This clause restricts cover to claims resulting from work undertaken by the insureds in certain countries. Most association liability policies have standard territorial and jurisdictional limits worldwide, excluding USA and Canada. If your insured undertakes activities overseas or for overseas-based clients, check what they are doing and how much income they are earning in each location. Run-off cover may be required if the insured retires, sells or ceases their association as their exposure to past work continues. A run-off policy is simply an association liability insurance policy which provides cover that is limited to work prior to the date the practice is sold or ceased to operate. What information we need to provide an association liability claim. So in an ideal world, a completed association liability proposal form giving a clear description of the client's past and present activities, income and claims history. Please ensure that the full legal name of the insured is shown on the proposal form. All entities to be covered must be named on the proposal form. Otherwise, they will not be covered in the event of a claim. Details of any overseas work and income is also desirable. Details of any contractors used if cover is required. Current insurance details, limit, excess, retroactive date and expiry date is also beneficial. That's a run through of the presentation. Now we move on to the Q&A side of things.
Okay, everyone, I do have a couple of questions that came through. The first question is there any size limit on an association? Do you have a minimum or maximum?
I suppose from my perspective and what we see are various, and we've got large ones, mediums and so on. Desirably, we're an SME insurer, so there's no certain size when it comes to small. As I mentioned before in the presentation, an association basically formed by two people. So it could be anything from startup to 100 mil. So generally our ML guidelines are around about the 100 mil turnover, and I haven't seen too many associations that are turning over 100 mil in WA. Maybe on the East Coast it's a different story. So I hope that answers the question.
Okay, we have another question. If I have a PI policy and a separate management liability policy for an association, is this a combination of PI and ML?
So, yeah, in short, it is. I think the point to bear in mind are the club associations and sporting associations, because there are injury exclusions under a association liability policy. So that's where a PI policy may be the more suited and tailored product for those clients. But, you know, you can always negotiate with your association liability insurer if anything can be done about the right back on the bodily injury. I hope that explains it.
Okay, we've got a few questions that have also come through on Q&A and a few on chat that I will try to answer. If association members also earn an income, would they be considered subcontractors, and what would the extent of cover be in that scenario for subcontractors?
Yeah, it's a good question. If they're earning an income, that's to be expected as well. We understand that all associations aren't purely not-for-profit. So I would not deem them as a contractor per se. I would deem them as an employee. But yeah, they form part of the association. I wouldn't have any problem providing appropriate cover.
Okay. Is fidelity cover full crime? Example, will it respond to an external criminal theft event without collusion involvement with any? Yes.
Under our current offering, I would say no. Under an ML, for example, where it is full crime, that's where it is broader, and those kind of cases, as mentioned, would be considered. So that you just have to consider there whether your client would just require the fidelity of full crime. So full crime policy may be the way to go.
Okay, there is another question. Hi, we're actually getting quite a few that are coming up everywhere. Would association liability be the most appropriate policy structure for cooperatives?
Yeah, it's a good question. Cooperatives are always a challenge, you're right, the way they're set up. So as a financial lines underwriting a cooperative, you'd have to look at the nature. There has to be a lot of information to convince us to write it, because it's a different setup. I personally, in a past life for another insurer, yeah, we would have written cooperatives under the association liability. Not saying we wouldn't here at Strictly. However, we want to know a lot more information about the cooperative and their setup and those individuals that are running it.
Okay, we've got a question that's actually been answered by Matt. It's about minimum premiums. He's saying that question about minimum premiums is $750 for $1 million of cover.
Yep.
That can give you an idea of cost.
That's entry level. Yeah.
Okay. Another question, are there plans to extend fidelity to third-party losses?
Always on the agenda, and the right person is on the call to consider that, the National Underwriting Manager. So yeah, we always look at revamping and looking at our products on a yearly basis. So that's definitely on the agenda.
A question, does this cover include association public liability?
No, and a good question, and not something I've spoken to the underwriting manager much about. In the past life, I did work as a broker, and we had the combined offering for liability. I think the wording's, it's about the language and the wording and getting both of the understanding. You know, you could say, let's just have park the PI on one side and the liability on the other side. Yeah, but from a legal position, there's a bit more involved. So I think it's doable, it's achievable. Whether we do it, I'm not sure. So, yeah.
Okay, given the number of members' records held by some associations, is there an option to cover cyber or privacy breach?
We offer a limit. So Berkeley stands on cyber. We've made it firm the last few years that we're not going to go full-blown cyber. We, like our ML associations, we offer a sub-limit, and it's a bit of first and third party. There's no social engineering. So it's a bit of a dip your toe in the water scenario for the client. So, however, if the client is engaged in those heavy cyber activities, it's advisable, obviously, to purchase full cyber cover.
Okay, we've had a question coming through about a copy of the presentation. Yes, we will be sending out a copy of the presentation after the event.
Absolutely. Yep.
Another question for you, Jason. Does the runoff cover work in the exact same way as a typical PI runoff? Is there a set percentage premium decrease each year as long as no claims are made?
Yep, spot on now. I should have elaborated on that. Apologies for the question. So it's a sliding scale similar to how we do for PI or ML. So the first year's generally the full premium, the annual premium, and then it's a sliding scale, 90% the year after, and then it slides off. So yeah, you can up to the statute period. So we as most insurers can offer up to the full 7 years.
Is social engineering, breaking, telephone fraud cover available under association liability?
I have seen that there are a couple of insurers that are offering it. We currently aren't, and there's nothing in the short term that we'd be offering social engineering cover.
So does the association need to have a separate public liability for the office, for example?
With Berkeley, that's the way we structure our offering. Two completely different policies, public liability and association, PI-based product, have different language, completely different. So the way we structure them is to keep them separate.
We've got a question about our appetite, about referencing that it's for all associations. Does this include registered training organisations, including trades and apprentices?
Yeah, RTOs, I've seen a couple and written people. Yes, we can if the RTO wants to go that way. A couple of RTOs I've written on a miscellaneous people, and it comes back to that bodily injury. So if they are heavy trades and they want the right back to bodily injury, the PI policy is probably more ideal and suited. But yeah, there's RTOs on association liability offerings.
Yeah, there was just a little bit of a more complicated question that we'll probably come back to after the session from Chris. I'll jump to Tony. Will you be applying the human disease exclusions on these policies going forward as you are with most risks?
Yeah. It's a Berkeley directive that we will be putting that on our policy, yes.
Okay, going to a couple of other questions that I'm just looking for now. Sorry, there's quite a few that have come through chat, so if I've missed you, I'm really sorry, but I will try and get to a few of them. What my understanding was that from a client's perspective, costs inclusive.
Yep.
It actually keeps going, my apologies. Was preferable. Cost inclusive is preferable?
Cost exclusive, you believe would be preferable because it's obviously excluding your defence costs, whereas inclusive is including those defence costs as in your sum insured.
Okay, do you offer association liability for a new venture placed together by a group of building surveyors or building designers?
We would consider that. Obviously, if we were writing the surveyors on a PI, we wouldn't because we don't generally write land surveyors. But as an association liability risk, we'd consider it.
Is there an insured versus insured exclusion?
Not what stands out. Unless Becky wants to point it out. It's just the usual. The exclusion under policy is really to do with fraud and criminal acts and so on.
Where does association liability sit with management liability?
So management liability is a separate, because the management liability is really covering, the specifics are covering the management of the business. The association is a different setup. Similar wordings, but obviously it's more designed for the not-for-profit, the association sector. ML's more the SME, proprietary limited, the mums and dads. Can be written on either, mind you, but it's just that the association liability has the PI component as well.
So fundraising organisations such as schools are a target for Berkeley?
Yep, I wrote one the other day. Actually, so they are. It's just really about if they're dealing with money, their controls and their procedures. But we can still look at them. Yes.
You mentioned the policy is PI based. However, one of the claims examples mentioned mental pain. Would this be a PPL claim under the definition of personal injury?
That's a good question. Could be either or. Could be a workers' comp claim even. The way it's been formulated and given to us, it's an association liability matter, but you know it could be spread a couple of ways.
Sometimes the PI exposure can blur. I get the association liability PI for the running of the association, but what about where the association provides professional care? An example is looking after a person with a disability. Yep,
and that's a good point as well, and that's where a lot of associations that we've done out here purchase a medical malpractice cover for that as well, because it's treatment. An association liability policy is a white collar PI cover. I'm not hiding that. It's a basic PI cover with the bodily injury exclusion for sporting events and so on. So, you know, it depends on what you are. For example, on the other end of the spectrum, solicitors. If they're looking for legal cover, then the association liability cover's not for them, a group of solicitors that band together. So really it's horses for courses.
Okay, we've just got enough time for one final question. Just asking you to explain the basic differences between management liability and association liability policies.
Yep, okay, so the main differences are, and to be brutal on the association, it's a PI. The PI component, the association ML cover won't have. So for those small associations, as I said, the men's sheds and so on, that aren't providing much professional indemnity exposure, at least they've got the cover there. The ML policy will not have any PI cover at all. And it is a fairly white-collar PI cover, but there's advice that the association provides to their members, to volunteers. So that's the major difference. Okay, well, I think that wraps up today's webinar. Thank you very much, Jason, for sharing your knowledge, and thank you everybody for attending today. We will be sending a copy of the presentation to you along with your certificate in the next few days. So I hope you all enjoy your morning wherever you may be. Thank you and goodbye. Thank you. Thank you all.